I was recently asked a question whether or not I thought it was a good idea to wait for good stocks to go on sale, given the fact that the market has been, for lack of a better expression, tanking.
People were making so much money.
This answer was from an Instagram live session. I think you'll enjoy it. Let me know what you think in the comments. And if you do like it, give it a thumbs up, make sure you subscribe, and become a CMQ investor. Let's check it out. Okay, we are live on Instagram right now. I've got a question here from Colt. There's also an ambulance going by behind me because we are in New York City. Colt wants to know, I should be funny, I should say I'm in a homeless shelter. I'm live at the homeless shelter where I live. People are like, should I really listen to this guy? It's hilarious to me. Sorry if anyone out there, if you're homeless, I apologize. But, okay, Colt wants to know, is it inefficient to wait for good companies to go on sale? What I've learned over the years is this. As investors, we tend to be really bad at knowing when is a good time to get back in the market. I know if I had just left, if I had pulled money out during the the initial COVID crash back in March 2020, I'm not sure I would have known the right time to jump in because it looked like the world was still going to end and continue ending. And I think it's just a reminder, it's better just to be in the market versus trying to time the market. I think this question comes back to that fundamental idea, which is time in the market beats timing the market. Now, secondly, I'd say, now this is about individual stocks, which is not the market, and that's why we have to be extra cautious here. The individual stocks that you'd want to wait to go on sale, I don't think that's a bad idea if you know what it means for them to be on sale. It's very easy to say that. It's another thing to really know. And also consider the fact that they may never be at that point again if they are, in fact, really great businesses. So just something to consider. I don't know, without going on for trying to find names of companies in my mind that I could tell you that I think might be sort of on sale. I do think that approach is a very disciplined approach. I remember an interview with Charlie Munger from a while back. I think it was a print interview, but he talked about a friend of his who was watching something like 100 stocks, waiting for one of them, for them to go to the what he considered to be the right price. And he said, that's a very disciplined way to invest. But most people can't do that, shouldn't do that. And I shouldn't say can't. I mean can't not as if you're not capable intellectually of doing it, but in terms of building up the knowledge you would need to build up and putting in the time to do that where you could invest that way. There's just, and I'm not speaking to Colt specifically on that, because Colt could be the perfect person to do this. It's just in general, the best advice that, again, it's not financial advice, but the best advice I've ever taken that I should keep applying more and more, and we're certainly seeing in this past couple weeks, it's almost always better to not try to pick individual stocks. People worry that indexing will get too big. Look at all of us talking about stocks right now. It's not passive is not going to destroy active in any way where it's, at least I don't think in my lifetime. Most people still, and even the people that are out here really pumping advice about the stock market, very few are actually saying you should do low cost indexing. But that is the proven way, or I would argue the best way, statistically speaking, to build wealth for the average investor. And if you do that and you're consistent about it, you're statistically likely going to do better, significantly better than the majority of investors, including the professionals. It's just not sexy. It's not exciting. It's pretty boring, and it doesn't require, there's some weird propensity we have as human beings, to want to make things that are easy more difficult. I'm finding this with YouTube lately. I've got so much content ready to go. It's not hard for me to talk about this stuff. It's actually part of my process. But then I'll be how can I redo this intro? And I'm not sure if I like this watermark. I just start drowning in the minutia, and focusing on things that don't matter, and then getting off the real game, which is publishing content and learning from how the audience responds to that, and getting better at the process of publishing content. It kind of, to use that analogy or use that parallel and taking it back to the investing world, we don't have any business picking stocks. The majority of professionals aren't good at it. A lot of people, it's fun. It's still fun to learn about businesses and think about it. I'm not saying don't ever do it, or, this is just, I've done well with certain individual stocks, but it's added a lot of stress to my life. The best investing I've ever done is low cost indexing because I don't have any stress from it. I don't ever freak out about it. It's almost and what got me to really lean into it, I think, was a quote from Warren Buffett. I wrote this down I have a weird memory, so I can remember stuff like this. In 2019, it was, dumb money ceases to become dumb when it recognizes its dumbness. We're all dumb money. Like we're none of us are smart money. None of us are, algorithmically trading and, like cracking the codes that you don't need to crack any codes. That's the whole point. The code's actually already been cracked for us. It's just a matter if we're going to follow the path or not. And it's not only our fault. We shouldn't just blame us and beat ourselves up here. The investment business, I'd say 99% of it is geared towards getting us to think we need to do more than what we're doing. Because that's what, that's their incentives. I'm not saying they don't believe what they're selling, but the investment business, it's in the business of selling us products. Every ETF, every, actively managed strategy, whatever you want to go down the list here, it's a product, right? Because otherwise you could just buy the index. You could just, get the market rate of return or get your share of the market rate of return or do something complicated. I see David says Jim Simons would disagree with that. Well, first of all, David, I don't think you know Jim Simons. Secondly, I know all about Jim Simons. And this is where people don't realize. Like, I don't want to sound like a jerk, but Jim Simons is awesome. He's an incredibly impressive person. We're not Jim Simons. And there's no other Jim Simons. None of us are going to be Jim Simons. And his strategy is for whatever it's worth. And I'm not taking anything away from him. But it doesn't scale like a Warren Buffett strategy. You can't put as much money into it. Not that any of us likely will have the chance to put, I don't know, like $100 billion to work, but there's a cap on how much you can invest. Investors in his fund have to pull out, I think, at a certain point. I don't know the details off the top of my head, but something worth looking into. But yeah, look, the code to building wealth, like if you want to crack the code to building wealth, it's why I call this CMQ, compound money quietly. It's compound interest. It's invest in something consistently, systematically over a long period of time and let the power of compounding do the work. That's the name of the game. That's literally how it works. We just tend to overcomplicate it and screw it up. Because everyone's a couple bad stock picks from almost being sure that you don't do the average rate of return. And that's the reality. And that's why most investors fail to get the average rate of return, including in the professionals as well. So anyway, I hope that's helpful though. For CMQ Investing, this is Chris Franco. Thanks for watching the video. I hope you'll subscribe and become a CMQ investor. Nothing in this video is financial advice, but I sincerely wish you all the best in your future investing endeavors. Take care. For CMQ Investing, my name is Chris Franco. Thank you for watching this video, and make sure you check out the links that are in the description. There's a lot of great original content there that you can enjoy and hopefully use to your advantage as an investor.